Well, good evening, everybody. Welcome back to Strongman Personal Finance. I have some sad news for the average working man that puts a little bit of money each month into their 401k, their IRA, to hopefully have a couple $100,000 in retirement. Because Wall Street is addicted to the grift. They are addicted to money. The biggest scumbags, the biggest grifting scum losers on the planet work in the finance industry. And they take and they take and they take by charging as many management fees as they possibly can. Because these people are rent seekers. We have already proven that the index fund, the total market index fund over time, beats most active managers. The index fund has democratized investing. But these Wall Street clowns, they're clever. They're little snakes. They use 100,001 tactics to try to convince you that they need to manage your money. They can provide this and that. And now that Trump has been reelected, there's going to be a wave of deregulation. Now, whenever you hear deregulation, people think that's a good thing because regulations are bad. And that's true in some circumstances. Some regulations stifle innovation and growth. I 100% agree. But when it comes to the finance industry, they need to be extremely regulated. They need to be over-regulated. They need to be shown for the grifting scum that they are. The more disclosure, the better. But Wall Street doesn't like that. They don't want you to know that the index fund over a lifetime is going to outperform them. They want to deceive you and charge you as many fees as they possibly can. So let's go read this article about private equity plotting with Trump to plunder your 401ks. Because 401k, the standard 401k we have right now, where you can invest in equity markets around the world, that's not enough. No, you need access to investing in private equity. And they're going to give a bunch of reasons why. But guess what? There's only one reason that Wall Street wants you to invest in private equity. So they can make more money. So let's read this article from Yahoo Finance. Private equity wants a piece of your 401k and hopes Trump can make it happen. Deregulation, bro. Private equity firms are hoping that the new Trump administration makes it easier for them to access to something they have long wanted. Your 401k. There's a lot of money in 401ks. And Wall Street, when they think about the number of dollars sitting in 401ks in America, they salivate. Oh, they're drooling everywhere because they want to cut. They want to cut of your money. And it's not good enough to have a total market or total international market in there. That's not good enough because those fees are low. Index fund fees are low. They can't make a lot of money off index funds. They need to find a way to make more money off of you. To steal your money. And that's with private equity, bro. Private is private, bro. It's not public, it's private. It's secretive, bro. Wall Street investment giants view Main Street retirement savings as a way to boost demand for non-listed illiquid bets that aren't traded on any public exchange. What a great thing to invest in. Non-listed illiquid bets. You know why a lot of companies are private? Because they're too garbage to go public. Just saying. Such investments include real estate funds, private credit, and leverage buyouts of companies. Yes, I want to invest in private credit and leveraged buyouts of companies.
That sounds like a great place to put my money, bro.
Typically, private equity firms such as Apollo, scum, Blackstone, scum, and KKR pull money from high net worth individuals and institutional investors such as endowments and public pensions, to make these bets. Yes, because apparently rich people, they have this idea that they have to be more sophisticated in their investments. They can't just have an index fund. That's for the plebes. They can't have a total world index fund. They need they need the alternatives, bro, because they're rich. Because when you're rich, you got to make a bunch of crazy bets and invest in a bunch of crazy things. Actually, no, you don't. You could be very rich and just have index funds. And you'll probably outperform the other rich people who think they're smart when they're actually freaking clowns. They're being conned by private equity.
Pay us fees, bro. Bro, private equity, bro. Excess returns, bro.
What they have long wanted to tap is more than the 12 trillion currently housed in defined contribution plans. So let's say Wall Street can get 1% of that. So let's see, is that $1 trillion? So if they could charge a 1% fee on that, that's $12 billion a year that they can make, taking from you. That's not good, okay? That's very, very bad. They want your money to lie in their pockets so they can buy their jets, bro. God, I hate finance people. They're scum. The Biden administration has not warmed to that idea. Good job, Biden administration. But industry watchers expect that to change under Donald Trump's second term.
We got to deregulate. Yeah, all regulations are bad. They're not there for any reason whatsoever.
He is expected to broadly loosen regulations that affect the world of financial services. The grifting is going to vertical line. You think the grifting is bad now? You think Wall Street is any better than the YouTubers? Maybe when it comes to education, but the grifting component, oh, they're exactly the same. Wall Street is scum. We'll make the case for a pro-growth regulatory regime that supports small businesses and provides more opportunity to everyday investors. More opportunity? Yeah, more opportunity to take your freaking money.
Oh, it's pro-growth, bro. It's growth. We got to stimulate growth by charging management fees.
The argument for such a change is that private equity funds could give everyday investors more diversification away from public markets and a shot at bigger returns. I doubt that. In exchange for some illiquidity. Look, number one, you're not going to get higher freaking returns. I don't think. Number two, there's enough companies in the public markets. Okay? And they're publicly traded. They're audited. You can see them fluctuate every day. There's a lot more transparency in public markets. And there's, 9,000 companies in VT? Oh, that's not enough. I need private equity. That's illiquid, bro. Illiquid means it's hard to sell. And you don't see prices fluctuate every day. You don't even know what the value of your investment is. And you sure as heck don't know what they're investing in. When I pull up VT, I can literally go down the list and see every freaking company that is in VT. I could do that if I wanted to. I'm not going to do it, but I could. I understand what I'm investing in. Market cap weighting, total world. What are you investing in private equity? Do you really know what these clowns are doing with your money? No, you don't. The reasoning aligns with broader concerns many investors have over the historically high valuation of the current stock market and the concentration of big tech stocks. Big tech is not concentrated. It's right where it should be. The market is pricing the stocks based on their future earnings. Indexes are always going to have a few winners, especially with these huge monopolies that we have. There's nothing wrong with the weightings of big tech. Okay? And valuations, yeah, they're historically high, but potentially that could be justified if earnings catch up to them. It's possible. Okay? It's not these one-shot ideas. These one perspective idea. Oh, valuations are high, so I need private equity to pay a bunch of fees. Of the top 10 companies in the S&P 500, well, I invest in more than that. All but Berkshire Hathaway are tech giants that make a ton of money. And they're monopolies. They make 37% of the index. Oh my God. Why are they 37%? I wonder. Mark Rowan, CEO of Apollo, has argued that too many investors are relying on the performance of too few public companies. Well, that's how indexing works, man. I know you want my money, Mark, I know you don't have enough. Should we get access to 401k through broad-based reform or regulatory change or regulatory encouragement? I believe that would be upside, not just for us, but for the entire industry. Oh, it's going to be upside for your profits, you scumbag. Today, both private and public assets carry risks and rewards, Rowan told Yahoo Finance, with more companies opting to go private than public. Yeah, because it's more secretive. It's more opaque. Like Tattoo Chef was a private company, and then during the clown market, it went public. It was a piece of garbage. That's just one example. And Tattoo Chef is still around. You might be investing in it. The biggest trend in our industry is investors, individual investors, and institutional investors looking at their fixed income bucket and saying to themselves, why is this 100% public? Yeah, because there's not enough bonds to invest in. You can get the total bond market at Vanguard in one ETF for a low fee. You could have access to U.S. treasuries. Pretty simple to understand. At rock bottom costs. But no, I need private credit, which, do I even know who they're lending money to? No. I know who I'm lending money to when I buy SGov. Not that I have any right now. But if I did, I know exactly who I'm lending. I'm lending money to the federal government. I get it. I have no idea who they're lending money to in these stupid private equity funds. I totally agree with our brethren, grifting brethren, at Apollo, BlackRock CFO, Martin Small. Yeah, I bet that's an apt name for you. Said in December at a Goldman Sachs conference when discussing the topic of putting private loans into retirement portfolios. Getting private equity into 401ks is a big opportunity and just makes sense, said KKR co-CEO. Why do you have a co-CEO? You know, I learned in the Army, you only have one leader, okay? One leader. What do we do? Oh, let the two leaders debate. Great idea. Said at the same Goldman Sachs conference. The argument against opening retirement savings to private equity is that the funds can be riskier than plain vanilla index funds, boring, and are less liquid. You want to sell it? Guess what? You might not be able to. Making it difficult to get money out if things go sideways. Yeah. And here's the even bigger one, boys. And the one girl that watches this. Private equity also isn't cheap, as fees can eat into investment gains. God, how can you not see the grift, people? The grift! It's so obvious. Many private equity firms charge investors fees that amount to 2% of assets and 20% of profits. This is a cash grab. Private equity can suck on my you-know-whats. There is no law stating that private equity can't be a part of a 401k offering that millions of Americans rely on for their retirement savings. But what the industry will likely want is specific guidance from the Labor Department stating that such investments can be acceptable alternatives for these accounts. They're not acceptable. That amount of rent-seeking garbage is unacceptable to me. But I'm not in charge, of course, because I don't wear a shirt. I get it. The first Trump administration said as much in 2020, but the Biden administration's Labor Department reversed the guidance by saying it didn't recommend it. Good job. Any new guidance on this front from Washington may also need to come with legal liability protection for retirement plan sponsors and administrators. No, you should get no legal protection, you scumbags. If you offer this garbage, oh yeah, you should be able to get sued.
We don't want to get sued, bro. Bro.
They are clearly going to need some comfort for themselves from a litigation risk. So what do you guys think about this? You think this is okay? You think this is cool?
Hey, private equity. Bro, Street, bro.
Is going to plunder your 401k? Collaborating with the Trump administration? This is not good, in my humble opinion. Book a free tax consultation with me. Let me do your 2024 business and personal taxes. I am a certified public accountant. I do taxes for every state in the United States. You can book a free consultation with me by clicking the link. I'll talk to you for free. I'll give you an upfront quote, and I will prepare your taxes better than all the garbage you're using now, unless you have another CPA. And I'm probably cheaper than your CPA because I'm a one-man show. It's just me, strongman personal finance, sitting right here doing your taxes. I actually did some taxes tonight, preparing them. I haven't filed them yet, obviously. I'm watching your stream in a jacuzzi. Good for you, man. Did you buy Tesla? Quantum computing or crypto? Thinking about going 50-50. I would overweight crypto because crypto's the future, bro. Bring back the Lafufu intros. Yeah, maybe when I cover him. Let's see. Anybody realize Felix and Friends is the biggest grifter? Everybody's a grifter. Bacon memes. I will help your disciples to sell your VT and buy. You mean B-U-Y, buy? Voo? Nice profile picture, by the way.
U.S. stocks, bro.
The grifting will continue until, my morale's plunging to 0. Gonna listen to Creed now. Good for you. Strong Dog, do you do taxes for residents of the United States of Canada? Coupon. I don't do Canadian taxes. I am just the guy, for whatever everybody keeps trying to call me, the Crocs guy. All right, well, that's all the comments for this video. Let me know your thoughts. Like, subscribe, book a free consultation with me. You can talk to me for free, and I'll give you a quote for your taxes. Pretty soon, I won't be able to do as many YouTube videos, guys. It's going to get busy, okay? I'm going to miss you. It's been nice these past few months just pumping out videos, talking trash, but it's going to come to an end. But if you book a free tax consultation, you can talk to me in person. Don't you want to meet me? Yeah. All right. Have a good night. Cheers.